Hello, good morning, trade pros. Welcome to the morning market update for Monday, May 14th of 2018. This is George Papsov from TRADEPRO Academy. I hope you guys had a wonderful weekend, and I want to wish all of you a happy Mother's Day because I didn't get a chance to do it on Friday, so I'm doing it now. So on YouTube, to you, if you're a mom yourself or anybody else that you know celebrating, everyone's got a mom or wife as kids, congratulations, happy Mother's Day. I want to start out today's morning market update by giving you a recap of what we're going to talk about. We're going to talk about the stock market and why it's green a little bit, why there's a little bit of risk-off sentiment, talk about the Federal Reserve, North Korea, and briefly touch on OPEC. So we got a pretty full and busy calendar this morning. Before we get into that, I want to give you guys one other update. This week, Tuesday, Wednesday, Thursday, we're going to be having an evening trading room, 6 to 9 p.m. Eastern. We're going to trade together in the same way that we do in the morning session, but this time it's open for everybody. It's going to be free to every single one of you, so I strongly recommend you join this trading room. You're going to learn a lot. We're going to use it for some teaching moments throughout the session where they come up, and you're also going to get a chance to see us trade live in our room with myself and our junior trader here, Victorio, who's supposed to be there. Say hi, Victorio. Victorio? Yeah, it's just an empty chair. He's not going to be able to say hi. He's going to be back in a moment. But yeah, with him and I, we're going to run the room, and it's going to be exciting. So you guys, if you want to join, click the link in the description. All the info is there. Now, let's get started. In Asia, Japan's up 0.5 percentage point. Hong Kong's up 1.4%. And China's up 0.4%, while India's flat. So Asian equities off to a strong start. In the first session of the week. In Europe, a midday market slip a little bit. Midday London's down 0.2, Paris is down 0.3, Frankfurt's down 0.4%. So some weakness in equity markets out of Europe. That's in large part due to some of the sanctions with Iran. There's a lot of a tough stance out of Europe at the moment, and UK saying that they're going to continue to support Iranian oil purchases, which goes against some of the sanctions that Donald Trump's trying to implement within the 180-day period. There's a 180 wind down period, as it's called. And then after that, some of those sanctions will start to kick in. So there's a lot of talk around that, circulating around that. So some weakness in European markets. And the Federal Bank of France, Villeroy, the speaker, said that, that he might actually, what he said was that the ECB should start to raise rates soon. At the end of this quantitative easing cycle, there will not be a renewal, and rates will start to go up in quarters, not years. And that kind of spooked out some of the bonds a little bit, popping yields higher in Europe, sending equities weaker. So that's why Europe's slightly on an undertone. Now in the United States, Dow Jones is up 0.4%, S&P 500 is up 0.2%, and NASDAQ futures are up 0.3% prior to the open, but we have since lost some of those gains. So I think in today's market, last week we had one heck of a rally. This week, I think we pull back a little bit. I would certainly not be buying equities at the top. I'd be waiting for a pullback to get the long. And if you're a little bit more of an aggressive trader, you could even be shorting these levels to get the slide and profit from it on the way down, and then reverse the trade at support and get long. All right, but certainly not a good idea to be buying here in the equity market. All right, another reason equities are a little bit firmer, along with oil and gold this morning, is the U.S. dollar is trading weaker. So currency traders, keep watching for that dollar to slide. 92 even is your key support on the dollar index, and then you could start to look buying the dollar and shorting other cross currencies throughout the week. All right, crude oil is down 0.2% to 70.54. Gold's down 0.1 of a percentage point to 13.19, but bidding a little bit now. And Bitcoin's down 3.5% to 83.83 once again. All right, 8,300s where we kind of gave our original buy signal. We had a target of 10,000, and we pretty much hit that to the penny. So that trade's pretty much done. This morning's economic calendar, we have 2:45 in the afternoon. Fed's Messer speaking. That's going to be interesting. I'll tell you why in a moment. 9:40 p.m. we have Fed's Bullard speaking. 9:30 p.m. we have the Reserve Bank of Australia releasing their meeting minutes. That's a really good evening trading opportunity. If we were trading the evening room, we would be trading that. All right, but we are not. We're starting Tuesday. So that's an opportunity for you today, however, at 7 p.m. Eastern time. All right, so this morning and over the weekend, there's a little bit more of a bullish tone to stocks because there is a meeting coming up on Tuesday. It's very important. Chinese trade officials are going to be coming into the United States to meet with the Trump administration, and they're going to start to have trade talks once again in Washington. All right, companies like Best Buy, ticker symbol BBY, Hewlett Packard, HPQ, and US Steel X are getting ready to testify in hearings that they're going to kind of voice their concerns with these trade talks and the tariffs on Chinese goods. So they're going to have a say as well. That'll be coming on the wire at some point this week. Tomorrow, these trade talks begin. Big stakes during these trade meetings between China and the United States. And it's going to cause a lot of volatility around that, because a lot of the news this week is later on in the week and not much on Monday, which is today. Today, I expect to see a little bit less volume, less volatility, and more range-bound price behavior from key markets. That's the expectation. Now, if it starts ripping up 30, 40 handles on the S&Ps, you bet we'll be long. It's just before that happens, we're going to need to see a lot more confirmation to get us into that type of trade behavior. All right, let's cover the Federal Reserve. Some key comments here out of Loretta Mester. She's going to be speaking again today. The Fed should continue. She said the Fed's going to continue its gradual approach to raising interest rates. It's still on pace. Given that inflation has not yet reached the U.S. Central Bank's 2% target in a sustained way, the U.S. should also keep its debt to GDP in mind before things get out of hand, she says. Current debt to GDP at the moment in the United States is 75%, but is expected to double by 2047. All right, higher debt levels fueled by the fact that 15 to 65 working-year-old males and females are declining in population, and a lot of the more seasoned workers are approaching the retirement age, and they're going to start to drain resources or pull resources from the system after giving into it for so long. There's nothing wrong with that. You've been working your whole life and you want to retire and just chill out and relax. You absolutely deserve that. You've paid into the system for a long time. So it's not on those people to say work longer or get paid less. It's a little bit more on the 15 to 65-year-old demographic that's currently working to turn this stuff around, create some more job opportunities. So there's that. All right. That's why debt to GDP is expected to skyrocket, double. That would be at 150% by 2047. Only Japan's already there. North Korea has announced that they're going to dismantle their nuclear test site this month. Donald Trump's campaign is going to take this as a win. They're going to say, we negotiated this. We were tough stance on them, blah, blah, blah. The whole reason North Korea backed down is because, did we lose internet? No, we didn't. I just heard the CQG cutting out, which I thought meant I lost internet. The only reason North Korea backed down is because their site was going to implode. All right. There was seismic activity and what is it called? Earthquakes going on, and that was signs that this thing's going to implode. And China said, wait a minute, you're doing this right by a border. You better stop, or else we're really going to have to get tough on you. And that kind of died out. No more nuclear talks. But of course, they're going to spin it as a win, as they should. All right, there's a big summit on June 12th for North Korea. Donald Trump tweeted, thank you, a very smart and gracious gesture for the fact that they're taking down their nuclear site. They said they're going to destroy all of the tunnels of the country's northeastern testing ground, and they're going to remove ground-based guard units, and he's going to invite, Kim Jong-un will invite journalists from South Korea, UK, United States to witness the dismantling of this project and the final kind of sealing off of the site. So that caused a lot of concern in markets, if you guys remember, just a few months ago. Now that's subsiding. That's officially over. So that's going to infuse a little bit of positivity in the market. OPEC makes some commentary out of this Iranian situation. Get this. This is funny. They said, what happens if the U.S. reimposes sanctions on Iran? One of the reporters asked United Arab Emirates Energy Minister Suhail bin Mohammed al-Mazroui. And he said, don't worry about supply. We've been here before. And I mean, what he should have said is, don't worry about supply. OPEC has a production freeze. We have the capacity to supply more. We've just agreed not to. We got a gentleman agreement. I don't know how long this gentleman agreement goes. This production cut is slated to go down in December of 2018. I don't know if that happens. Two reasons. Russia might cheat first, which I would understand. Everybody wants to sell their product. It's kind of like an agreement to not sell stuff. Imagine you and I, we own a business. And I'm like, you know what? I agree not to sell units. And you're like, I'm not going to sell widgets either. So none of us are selling widgets. And you got like a crazy lineup of people at your door wanting to buy widgets. You can be like, you know what? I could just raise my price double and still sell some of these widgets. And you kind of start to think, like, am I bound to this agreement? I don't know. So anyways, point I'm trying to make is OPEC has the ability to supply way more than they are at the moment. They're holding back on supply, which is kind of manipulating the price higher. I don't understand how this OPEC stuff's legal. Like any other business, if you collude with a whole bunch of the key suppliers to hold back supply, That's illegal. It's not an OPEC. Welcome to cartel. Victorio's back. Hey, Victorio. He's going to be helping us run the trading room. I pointed to the empty chair before. I'm like, Victorio? Yeah. Yeah. You should have. That would have been good. All right, guys. That's all we got for you today. I hope you enjoyed this morning market update. I'll see you guys in the trading room tomorrow. It's going to start at 6 p.m. Eastern. And I'm really excited. It's open to everybody. It's free. Come on out and join us. There's no reason not to. Say hello, take a free pen, have a free drink. Just kidding. It's not a physical event. But we'll see you there tomorrow. All right. You guys have a good day. Manage your risks today. I get the sense we're going to have a lower volatility, lower volume day. One thing you could do to prepare yourself for that is trade less size, trade less often. All right. Less often, less size. And the third thing you could do is take profit quicker. Right? Take less profit more often is the right word. Cool. I'm waiting for you guys to say something. Cool. Come on, YouTube. Oh, I heard a voice in my head. There you go. Take care, guys. See you later. I'll see you tomorrow. Manage your risk rate with TRADEPRO. Adios. Wee. Wee. I like the chair swivel. It's special. Thank you, sir. See you later, YouTube. I'll catch you guys tomorrow. Where's the mouse?